Hello, today is Thursday. It is the 28th of June, 2012. Before we get into the silver charts and even one gold chart, I want to go over an article that I have seen on CNBC. The link is on the top right-hand side, cnbc.com/ID/47990167. And the article is entitled, Is Gold on the Edge of a Violent Downturn? There is two paragraphs I want to go over to start. First paragraph, quote, Gold is on the brink of a violent downturn and could even fall as low as $700 an ounce as the risk of deflation in developed economies grows and technical pointers turn bearish, one expert tells CNBC. End quote for now. When you have an expert and CNBC in the same line, pretty much beside each other, two words close to beside each other, then that's a yellow flag in my opinion. And quite frankly, if you're looking for contrarian indicators or you're hoping that they say something like this because they want to scare people, then this might be a good thing. But let's move on. Quote, technical levels show us when the trouble is coming. Gold struggled at 1,700 and then at 1,600. If it breaks with the next key level of 1,500, which could be approaching soon, investors would start panicking and selling hard. Yoni Jacobs, Chief Investment Strategies at Chart Profit Capital, said on Thursday. Now this is, end quote, this is where I have a little bit of a problem. And that is because A, he's an expert. He's a chart prophet. And yet, why are we using even numbers like 17, 16, and 15? For if you're an expert and you are advanced at being able to think, then you would probably find some next levels. And they say the next key level is 1,500. It's not. It is absolutely not that. When we go to the charts, I'll show you that it's not a key level. Let's move on. I did some research on this guy. Couldn't find much. I wanted to get past predictions. Couldn't find anything. Apparently, he wrote a book. Yes, he wrote a book. And the book is called Gold Bubble. And on the back of it, quote, this is part of it. For years, investors have considered gold safe from recessions, falling markets, and currency depreciation. But with gold prices up more than 600% over the last decade alone, that fantasy is destined to fade fast. End quote. Destined to fade fast because more than 600% gains. Quote, gold, like housing and technology before it has entered a bubble, it too will burst. In Gold Bubble, profiting from gold's impending collapse, Yoni Jacobs looks at how we've got here and what you can do to protect yourself or even profit from what lies ahead. If there were a rule that 600% is designed to fade fast, then the low of $35 low from the late 60s requires the collapse to start at 245. And I use the word requires because you stated, you being Mr. Jacobs, that prices up 600% alone, I see this is the word alone right here, is destined to fade fast. Then why didn't in 1970, whatever year it was, did the price not collapse at 245? Rather, it went up to 850. Let's continue on further within this rule. In 1982, the Dow bottomed at 770. 7 times or 600% gains on this destined fade fast rule would have been 53.90. But it kept going and going and going up to about 11 or 12,000 in 2000. Wow. And then even then only went sideways afterwards. Okay, number 3, how about this? In 2002, Apple AAPL was $6.36 a share. 600% gains on this is $44.52. Today, Apple is trading at over $550 a share. The NASDAQ went up for 25 consecutive years, straight up I may add, from 1974, starting at 5,500 up to 5,132. Or a gain of 9,250%. That's higher than 600, by the way. And 600% is 385, which was tested in 86 without resistance. Okay. Let's now go and take a look at this gold chart now. 1500, according to him, is a significant level of support, which is roughly around here, which is pretty much what we've been testing. Myself, the next level to me is around 1400, and it's also Fibonacci retracement. In fact, now he says 700, which is right here. I'm not a big believer of the 50% Fibonacci retracement. Apparently he is, but no, he's not, because I looked at some of his charts. He uses linear charts, not logarithmic, and yet he's an expert. Yeah, interesting. Interesting, and I don't know if he knows how fiat currency is created, because there's more. Let's just see if I saved it. I didn't. Oh well. There's a video that he did where he talks about reasons for why it's going to collapse. And the link is just type his name, Yoni Jacobs, and you'll be able to find it. He did this a couple months ago on, I think it was one of the Yahoo shows. One like, not the one Jeff Mackey is on, but one like it. Or maybe Jeff Mackey wasn't on that day. I don't know. But I don't think he knows the situation within the fiat currency and how it's created. Or maybe he enjoys the fact that debt is mathematically guaranteed, automatic I should state, and thus multiple people are going to be forced to suffer. Maybe he enjoys that. I don't know if he does. He's kind of evil. Really evil, actually. But let's move on. Again, this is the gold chart. It has been going pretty much straight up. He talks about trend lines being broken, and that's the reason for the collapse. Well, I got news for you. This trend line collapsed in 2005. Were we supposed to say here that it's just over? In fact, when we look at this, that even gives me more for 1400 because we're not even at that trend line now. No, we're not. No. Let's go to silver. Let's go to silver. This is silver at 1:24 p.m. Eastern Time today. And right now, as we stand, the price action is at 26.31. This previous level of support has been a little bit of resistance along the way. And as far as trend line analysis is concerned, obviously, this trend line never did get taken out. Again, if you were looking at linear charts, you would have seen that it got taken out. Not on this one, though. And we're now pretty much at the bottom part of this trend line, however you want to draw it up. That doesn't mean it's going to hold. But when you take a look at this on a weekly term time frame, here we are. This is the weekly chart. We're right back at this bottom part of this range again. The more often support is tested, more likely it is taken out. And this is just a little bit of a mess as far as just the last few weeks are concerned. But a break below this is a significantly sized break, to say the least. Therefore, when we look at this on the quarterly time frame, that brings us to the next significant level. And I've talked about this so much. I'm just going to go over this because there's new people possibly. The next long-term Fibonacci level is in that of 1910. And it's a range level. It can be a couple below, dollars that is, and a couple above. Anywhere in this area here is a definite hit. If, of course, it manages to go there. But when you see a breakdown below this kind of level, then it's really not that big of a surprise, or what shouldn't be a shock, to have sudden downside moves. I'm going to finish off silver by taking a look at the 5-hour chart, because it's a mess of a chart, to say the least. But before we do, I want to go back to the daily chart, and then we'll go back to this again. I talked about this failed breakdown, boom, there she goes. So now let's go back to the 5-hour chart. Or breakout. So this was a failed breakout. What would have been important would have been to hold this area as support rather than resistance. But that didn't occur. So as it was going down below this, that's warning signs for us to make another leg lower, and it did. Now all of a sudden it has this breakout in here. And same thing as here. You would have wanted to find support in around here. Well, that wasn't the case. And by the way, this chart isn't as accurate as I want because the price action is below 26. This is yesterday's chart. Let's take a look at find today's. And these links are available in the more information box. Okay, there we are. This is today's chart. There's that breakout, but it didn't find support where you'd want it to. Instead, it was resistance there and now broke down support, fast move down below. The low is 26.12. This is the lowest it has seen since September of last year. This is about a 9-month low. And it's only 2 cents above the low from that point. It was 26.10 and September 30th or something around that date. And in fact, if it goes below 26, which is it's extremely probable to do so very soon, this will be the first time since late November of the year 2010 that price action would be below that 26 level. Let's go back to the quarterly time frame. I was thinking about doing this all week, and I just thought about this now. What's a dip? Question is, how many dips are on this chart, starting with the bottom? You can try to count. I count 4. Right here was the first one. You really couldn't really get into it till around here anyway. How long did it take before it broke out and make a new high? How many periods was it, including the collapsing period? 1, 2, 3, 4, 5, 6. It took 7 periods, 7 different quarters to get by it. Number 2, right here. It really, the dip didn't start till around down here. And there was, including the collapsing period, 2, 3, 4, 5, 6, 7 periods to break above. Number 3 dip started in here. You really couldn't start getting it till around in here. And if you bought it here, it kept going lower, but obviously it managed to get higher. How many periods did this count as? 1, 2, 3, 4, 5, 6, 7, 8, 9. And now from this one, we are at 5. And we will go into the 6th one starting next week, because the quarter will be coming to an end very, very soon, which is the end of tomorrow, basically. And I'll probably do a video tomorrow. I don't think I'll do another one today, even if it does capitulate or if it does bottom, but I'm not expecting either to occur today. But as far as the odds of a capitulation move, it's definitely not a surprise if that's going to be the case on Friday or next Monday, next Tuesday, or as we move into the month of July. After all, if it's usually 7 quarters to get past this high, we're going into 6, which would be, it could take us really into the end of 2012, 2013, based on previous history, before it breaks past that 50. But an easy prediction is this. This will bottom at some point, whether it be here, 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 here. But when it bottoms, it's probably a safe prediction that not only will we never see those levels again, that it will break past this high and decently take it out within this decade. To me, that is a very safe prediction. And the reason why I'm saying this is because I know how the banking fraud works on multiple levels. And the only thing that's making me to be incorrect is if the banks win, people remain complacent and they allow the New World Order to do what it is that they want to do. Whether it because they're mind control, they don't know what they're doing, or because they love the slavery system. Thank you for tuning in.